Welcome to Fiscal Integrity Group, your ticket to bookkeeping greatness.
Welcome everyone, it's Sandy back here for another knowledge nugget, and today I'm talking about types of audits you must be aware of. You know, everyone in business has obligations. We have obligations to our customers or our clients, paying staff if we have them, paying our suppliers or contractors, and most certainly our overhead expenses that keeps the lights on. But also as business owners, unfortunately, we also have obligations to the government. And if we don't service our obligations, then the business doesn't last very long. Like most governments around the world, its citizens have to pay taxes. And if you're in business, well, you get to pay more taxes. Yes, most business owners get a rude awakening in the beginning when they realize that their first job is being hired on as the broker for the government, because it is our obligation to collect sales tax, payroll tax, the employee safety tax, corporate tax, and a myriad of other taxes required by law to the government. Unfortunately, it is what it is, and I doubt there is much we can do about it short of moving to another planet. Even then, give it time. The one thing about governments is they are smart enough to know their citizens hate paying taxes, especially if in your business, because there's many more taxes to collect and pay. Many try not to pay more than they have to. Some stretch to pay less than they should. There is a saying that's out there in the world: tax evasion is illegal. Tax avoidance is a noble pursuit. Okay, having said that, governments want what is owed to them, and they know exactly that amount. I have always said there are 1,000 ways to cheat the government, but they have 1,001 formulas to know exactly how a business owner cheated them. And this is where audits come in. A good portion of our tax dollars are designated to the audit division. Auditors are trained well to find money. That is their job. And if they come calling, you can't say, "Go away." As a bookkeeper, you must be aware of your obligations to the business owner and the government for reconciling the types of taxes you are working with and to remit the correct amount. It is also your obligation to know the types of taxes this business owner and industry is required to collect. Let's take a look at the types of audits that happen here in Canada. Now, if you're listening to this and you live outside of Canada, I bet you still have some similarities to where you are, and I would love to collaborate with you on those. In the meantime, listen to what I'm saying and then see if that applies to you. So these are the types of audits that I'm going to cover today. We have HST and GST and PST, and I'm going to explain in detail what there are in a moment. Of course, we have multitude of payroll audits, workers' compensation audits, and corporate audits. So let's take a look at those, and I'm going to start with HST. HST and GST are retail sales taxes, and depending on what province you live in will determine whether you are HST or GST. Now, HST is harmonized sales tax, and this is where we combine the provincial and the federal taxes together all in one go and only report to the federal government. If you live in a different province and it's goods and service taxes, this is where the provincial and the federal are not merging the two together. Therefore, goods and service taxes is federal, and that's where you would remit to the federal government. And then we have another provincial tax called PST, and I'll get into that in a moment. That's next. And that will just go to the provincial government. So some provinces remit to one entity, and some provinces remit to two entities. HST and GST can actually be a very tricky and convoluted sales tax. Now, I do get into the detailed rules in another knowledge nugget. Therefore, with this one, I am strictly focusing on how an auditor goes about finding money and the types of audits you should know as a bookkeeper. When it comes to an auditor and an audit, depending on the industry, the basic process is using formulas and reviewing paperwork and statements and financial reports going back a few years for them to determine if the government is owed money. Let's take a look at the auditor's process. Their first aim is to look for sales tax underclaimed when it comes to invoicing customers or clients. They will look to see if the business owner or bookkeeper is following the rules when it comes to invoicing to other provinces or countries. You see, here in Canada, we have different percentages per province. Another thing that you have to be very careful about is the different rules when it comes to services versus tangible products. You see, where the service is performed or where the product lands will determine the HST or the GST charged. Their second aim is to look for sales tax overclaimed in regards to ITCs or HST paid on a purchase. An ITC is actually an input tax credit, and it is in regards to having the ability to deduct HST paid on purchases from what is collected in the same remittance period. Their aim here is to find errors on overclaiming these ITCs. They will also review that all expenses are justifiable, that they are really business expenses and allowed to be written off. This is a big one because some business owners may have a tendency to push personal expenses through business, and a business owner may stretch the definition of what is an allowable write-off. As a bookkeeper, you must watch your back on this one. You could be blamed if the audit result is not a positive one. As a freelance bookkeeper, I was always covering myself when I suspected personal expenses being pushed through the books. How did I cover myself? Communication, verbal and through email if I had to. For me, most of the time I would mention to the business owner that particular expenses may not be allowed if an audit occurs. Now, the auditor is also looking for other things. They are required to go through a structured formula, and this is why they're asking for all the statements, all the revenue invoices, all the paperwork when it comes to expenses, and also they want to review the corporate structure, and that's why they ask for the minute book, because they also are required to look for fraudulent activity. And this is where I say that they have 1,001 formulas to find out if a business owner has claimed all the revenue that they should have. So this is a whole other part of the audit. So what happens when the audit is over? The auditor will calculate what is owed and tack on penalties and interest back to when the payment should have originally been paid. If they remove any questionable expenses, the company is hit with penalties interest in 3 different directions. And this is important for you to know as a bookkeeper. So let's take a look at this. If you owe GST or HST, then there's going to be penalties and interest on that. Just like I said, they'll take those penalties and interest back to when the original amount should have been owed. The second thing is, if expenses are disallowed and they remove them and it increases the corporate profit for the years audited and filed, then the year-end financials are reassessed and penalties and interest could be applied. Then guess what? What do they do with those expenses that they disallowed? They put them on the personal taxes, the shareholder loan account. Then again, reassessment for that personal tax, penalties and interest are added and could be applied. So bingo, 3 times if there's money owed in an HST audit. Moving on to PST, which is provincial sales tax. Here in Canada, this pertains to certain provinces: British Columbia, Saskatchewan, Manitoba, and Quebec, all with varying rates of 5% to 9.975%. If you wish to take a look at these, the link to the website is in our template forms and links section. It actually is a very simple sales tax when it comes to reconciling and remitting to the government, but it has some gray areas when it comes to charging or not to charge. I remember years ago when it was here in Ontario, we had to be careful about discounts and coupons. We also had to be careful about selling into other provinces, real property, software, and even selling of CDs or DVDs. I was speaking with an auditor once, and the DVD was taxable once it was a DVD, but keeping it into cyberspace, it stayed non-taxable. So see how you need to research before an audit happens? That is when you do not want to find out you should have been charging PST. Therefore, as a bookkeeper, do your homework. Ask the accounting firm or Google your government website. If it is still unclear, it is best that you give them a call and then they can help guide you to the correct regulation. An auditor's main focus is ensuring PST was charged when it should have been charged. They will want all the same paperwork as an auditor for HST or GST, but usually focus on the sales. They will also focus on the expenses as well, especially when it comes to asset purchases. And don't kid me wrong, they will also be looking into fraudulent activity. It's always about looking into were all the revenues claimed when they should have been claimed. The end result with a PST audit is again finding missing money for the province. Penalties and interest will occur as well if money is owed. Let's move on to payroll. Now, along with payroll comes a few audits that can occur. Having said this, I do find them the quickest and easiest audits to get done, which can actually be performed in less than a day. The other ones like HST, GST, and PST can be anywhere from 3 to 5 days or more if the paperwork is missing or answers aren't coming quickly enough. So when it does come to payroll audits, the auditor simply formulates the total of the T4s versus what was paid in the year. So depending on what country you live in will determine what you call a T4. The business owner simply pays the difference if there is one, plus of course late penalties and interest. Whenever we have been a part of these, and if everything is in order, the auditor is not in the office for more than a few hours. Okay, the auditor's job is also to ensure everyone being paid for labor is either an employee or if a subcontractor, the person has more than one client. If not, this subcontractor is deemed an employee by the government and deductions plus penalties and interest are applied. I'll give you an example here. If someone is working for a company, it's 40 hours a week, they're not allowed to invoice that company unless they are in business for themselves, they're a corporation, and they have more than one client. Otherwise, Revenue Canada deems them as an employee and deductions should be taken. So depending on where you live, you should know the rules when it comes to subcontractors. Bookkeepers and business owners should know the difference. Also, casual labor is not favorable in the eyes of the government. Too much casual labor, and I was once told that it shouldn't be more than $1,000 per year, then these people should have deductions for their payroll check. One thing to mention is the peer report we have in Canada. It may be called different names from province to province, but I am sure each country, state, and region does have something similar. A peer report is short for Pensionable Insurance Earnings Review. So it is a review rather than an audit, but you will still be taken to task if there are differences at year end. This report reviews and reconciles the deductions taken in the year. As bookkeepers, we have to question ourselves, did we deduct from each paycheck what we were supposed to deduct? Nowadays, it is easy with accounting programs, but you have to ensure you update your tax tables when you are supposed to do so. The government sends updates out, and bookkeepers need to know when and how to properly upload the tables. The best thing about technology today is the accounting programs. They do really make it so much easier for us. Sage 50, QuickBooks, Xero, and many of the other programs out in the field usually automatically send payroll updates for us. But the one thing that you have to make sure is when you upload them, did they actually work? You need to check your accounting program processes to ensure you are clear on these. Not deducting enough taxes from a paycheck can most certainly frustrate the business owner if they have to pay additional taxes well past when the year is over. Another item that is industry specific is auditors are looking for T5018 slips. These are for subcontractors that are not incorporated. For example, in the housing and construction industry, there's a lot of, shall we say, under the table payments, and I know the government here in Canada wants to crack down on these types of industries. Now, when it comes to T5s, T5018s, and for the most part T2200s, these are fairly easy forms to fill out. If you want to see what they look like, We have links to these in our templates, forms, and link section. Along with payroll comes workers' compensation. For us here in Ontario, Canada, we call it WSIB for short, but it does stand for Workers' Safety Insurance Board. Whatever you call it where you live, it is the safety insurance if a worker is injured on the job. This is also a very simple and very quick audit for an auditor to come in, review, and do their thing. In the last year, I've managed 5 of these for business owners, and in all cases, the auditor was gone within 3 to 4 hours. Let's review what the auditor is looking for. Here in Canada, the workers' compensation is based on a rate per industry against the total gross payroll. Therefore, the first thing an auditor is going to do is ensure that your calculation is using the proper rate. To determine that rate depends on the risk of the industry. For example, bookkeeping and accounting offices are at a very low rate because the risk of injury is low. When we owned our own company, our rate was 0.17. But if you have high-risk industries like electrical or construction or any other type of high-risk industry, they have to be prepared to pay thousands per remittance, depending on their gross payroll totals. Electrical and construction, I've seen their rate as high as 6 to 8%. And so that's a huge difference between a low-risk industry and a high-risk industry. The auditor's main goal is twofold. Number 1, cross-checking to ensure the business has paid using the proper rate for that industry. We've already kind of talked about this. But also they need to ensure that the payments made reconcile to the gross amounts for that particular year. Secondly, subcontractor expenses. These are to be under the workers' compensation umbrella as well. Many times business owners are caught on this. If a subcontractor is not a corporation or doesn't have their own account, then the business owner is to calculate their cost onto the remittance as well. Late payments, unfiled remittances, all auditors would be checking into these, not just workers' compensation. Auditors will seek out businesses who do not have an account but have employees. Therefore, eventually the business owner will get taken to task. One last audit that could occur when you have payroll, and that is a business payroll tax that we have here in Canada called EHT, which is employer health tax. If the gross payroll is $450,000 or less, the company is exempt and you don't have to worry about it. If it is higher, then be prepared to start your calculations and expect to make remittance payments. As a bookkeeper, always be wary of your year-to-date gross payroll as it grows. The Ministry of Finance will not call you and mention you need an account. I have inherited files in 3 years past with no phone call. When I called the ministry to open an account, they said, yes, we have known about it. So you have to be very careful here. EHT auditors do review the company year-end payroll. For the most part, they eventually show up stating the company should have been paying. Let's move on to corporate audits, affectionately known as lifestyle audits. These audits occur when the government questions the year-end financials. For example, when it comes to small business owners, if the government sees income statements showing a loss year after year after year, then they question how is this owner making a living and why would they keep this company open if it's in a losing battle all the time? This audit is actually a scary audit. They not only ask for corporate paperwork, but personal as well. Far too often, the government has seen the business owner living in a big house, multiple cars, lots of vacations, kids in private school, and well, they gotta think, how can they afford this if the corporation is in that negative position? So I guess in essence, they're looking to see if there is a very wealthy spouse, family member, sugar daddy or mommy, or parent that feeds the luxuries of the personal living expenses. As a bookkeeper, keep your postings as black and white as possible. Having said this, the decisions the business owners make are theirs to bear alone. Another audit occurs when there is fraud. This, my friends, is called tax evasion. Pretty heavy stuff, and I personally wouldn't bookkeep, or I would stop bookkeeping if I suspected any wrongdoing. As freelancers, Herb and I constantly made decisions whether to take on or keep a client when we suspected fraudulent activity. If you are a freelancer, consider doing the same. Now, when it comes to fraud, it isn't always the government. When a business owner suspects fraudulent activity from a partner, a staff member, or even the bookkeeper, then they may hire on a third-party bookkeeping or accounting consultant to check the books. It is very costly, but well worth it. How does a business get called for an audit in the first place? Well, I've come up with my 5 main reasons, so let's take a quick look at these. The first one is name review. Actually, business names will be called up once every 4 or so years, and whoever's doing the reviewing will look for abnormalities that show up between the remittances and the financials. If there are some, then an audit may occur. If everything seems normal, then they may consider not doing anything about an audit. Because quite frankly, if a company is very, very small, it may not be worth them calling an audit. How about a random industry audit? You could be the best of best bookkeepers and you can't avoid this one because they're targeting an industry. The audit division may take a look at a specific industry in a certain region and pick like-minded companies. They then compare similarities with the financials as well as the differences. Audits always are high risk when companies file their remittances late, don't pay in full, or not at all. They will catch up with you if you don't make your payments. Also, if you ignore them, be prepared to eventually have the bank account frozen. They have the ability to do this. How about bankruptcy? The government still wants their money, so therefore they will be involved in the bankruptcy process to see if they can get it. And the last one is the snitch line. This is my favorite when I have to deal with bullies. The business world is full of them. If they try and bully or blame me for things, then they most likely do it to others. I have to stay professional and can't use this line, but others will. It has been said that many ex-wives know the number by heart. In closing, what can we do as bookkeepers? Well, I'm most certainly going to run the risk of repeating myself from other knowledge nuggets, but it is very important that you do know the rules. And if you're unsure about anything, ask questions. Especially if you've just been hired as an employee or a freelancer, take a look at the historical data and processes and make sure the rules are being covered. The second point I have here is measure twice, cut once. What that's really saying is take the time to do it right the first time around. It'll definitely help you in the long run. Thirdly, protect yourself, especially if you're a freelancer. When mentioning something isn't kosher, for example with personal expenses, do it in an email. Ask a question in that email. This forces a reply, and you keep that reply in a safe area, just in case you need it further down the road. Keep your postings and your filing system simple. You will have to defend your postings in an audit, and all that paperwork will have to be pulled for that audit, so keep it as simple as possible. Over in our template forms and links section, I have a link to the top things that may trigger an audit if you're interested. Also, what might be a good read is the Taxpayer's Bill of Rights. Auditors need to abide by these, and they don't always. I want to leave you with a phrase I heard from a colleague. I was speaking at a convention, and what she said I found quite funny. So when it comes to the government and the auditors, we are not satisfied until you're not satisfied. Thanks for the chuckle, Lori. That's it for this knowledge nugget. Until next time, keep crunching those numbers.
Fiscal Integrity Group, your home for the advancement of bookkeeping and bookkeepers.